Hi, I'm Michael. In this module, I'm going to show you how to start land investing the right way by building a simple, scalable foundation from day one. Many people believe real estate requires tenants, renovations, and constant management, but vacant land offers a cleaner, more streamlined path into the industry. When approached strategically, land investing can provide predictable margins, lower operational risk, and strong long-term scalability. Today, I'll walk you through a practical framework designed to help you reduce complexity, protect your capital, and confidently take your first steps into land investing. Most beginners assume real estate investing has to be complicated in order to be profitable. They imagine managing tenants, coordinating contractors, handling inspections, and constantly solving unexpected problems. That traditional model can feel overwhelming, especially when you're just getting started. Land investing changes that equation completely. Vacant land has no structures to repair, no plumbing to fix, no tenants to manage, and no renovation budgets to control. It is a clean, straightforward asset. When you remove operational complexity and follow a structured plan, land becomes one of the most accessible and scalable entry points into real estate investing. Traditional real estate often looks attractive on the surface, but houses introduce multiple layers of risk. Structural problems, renovation overruns, financing delays, tenant disputes, inspection issues, and ongoing maintenance costs can quickly reduce profit margins and increase stress. Vacant land removes nearly all of these variables. There's no building to repair, no renters to manage, and no continuous upkeep expenses. What you're buying is a simple, undeveloped asset. For beginners, fewer moving parts mean greater control, and greater control reduces risk. When complexity decreases, confidence and scalability increase, especially in your early deals. Land investing offers several distinct advantages, especially for beginners building their foundation. First, operational simplicity. Once you purchase land, there's very little ongoing management required. Second, low holding costs. Property taxes on rural parcels are often minimal, and there are no repair or utility expenses. Third, a lower barrier to entry. Land prices are typically far more affordable than houses. Fourth, reduced competition. Many investors overlook land because it feels unfamiliar. Fifth, cleaner transactions. Sellers are often motivated and less emotionally attached. Together, these advantages create a more controlled and scalable investment path. Success in land investing begins with structure, not impulse. Before purchasing your first parcel, you need a clear framework that guides every decision. That starts with defining your available capital and understanding your personal risk tolerance. Next, identify your target market and geographic focus. Choose a niche that aligns with demand and simplicity. Just as important, determine your resale strategy before you ever make an offer. When you approach land investing as a business, with measurable goals and repeatable processes, you remove guesswork. Clarity at the beginning creates confidence and consistency as you move forward. Not all land is ideal for someone just starting out. Your first deals should be simple to evaluate, straightforward to market, and easy to resell. The goal early on is clarity, not complexity. Rural acreage often provides an affordable entry point with broad appeal for recreation, camping, or future building. Infill lots within established areas can attract builders or local buyers. Tax-delinquent parcels may offer motivated sellers and strong discount opportunities. Choose property types that minimize confusion and maximize liquidity. A focused niche helps you learn faster, build confidence, and create consistent results. As a beginner, your priority is protecting both your capital and your confidence. Not every land deal is a good first deal. Some properties introduce unnecessary risk that can stall your momentum. Avoid wetlands or environmentally restricted parcels that limit development potential. Be cautious of landlocked properties without recorded legal access. Complicated zoning regulations can create confusion and delay resale. Unclear title history can lead to legal disputes and unexpected costs. Early success builds confidence. Early mistakes can drain resources. Focus on clean, straightforward opportunities. Simplicity in the beginning creates stability and long-term growth. In land investing, profit is made when you buy, not when you sell. That's why research is critical before making any offer. Every parcel should be evaluated using a consistent, methodical process. Start by confirming zoning and permitted uses with the county. Verify legal access through recorded easements or public roads. Visual access is not enough. Review topography and flood zones using GIS tools. Check for unpaid taxes, liens, or HOA obligations. Finally, analyze closed comparable sales, not just active listings. Thorough research reduces risk and protects your margins from the very beginning. Accurate valuation is the foundation of profitable land investing. Your objective is to purchase property significantly below its realistic resale value, creating immediate equity and clear margin. Begin by reviewing closed comparable sales in the same area. Adjust those comparisons based on lot size, road access, available utilities, terrain quality, and overall buildability. Market demand also plays a critical role. Even a well-priced parcel must have an identifiable buyer pool. Avoid relying on active listings, as they reflect asking prices, not confirmed value. Conservative valuation protects capital and ensures every offer is grounded in measurable data rather than assumption. One of the advantages of land investing is flexibility in funding. You don't always need large amounts of capital to get started. You simply need the right structure. A cash purchase allows for faster closings and stronger negotiation leverage. Seller financing can reduce your upfront investment while creating flexible terms. Assignments allow you to contract a property at a discount and transfer the deal to another buyer for a fee. Partnerships can also provide capital while you manage sourcing and execution. The key is aligning your funding strategy with your resources, risk tolerance, and overall investment plan. Once you've acquired the property at the right price, effective marketing determines how quickly you convert it into profit. Visibility and clarity are essential. Lower-priced parcels often perform well on platforms like Facebook Marketplace or Craigslist, where buyers casually browse for opportunities. Higher-value properties may attract stronger interest on specialized land platforms. Every listing should include a compelling headline, high-quality images, detailed parcel maps, complete property specifications, transparent pricing, and a clear call to action. Over time, building a private buyer list becomes a strategic advantage, reducing marketing time and increasing transaction speed. Many new investors lose momentum because they overlook basic principles. Every purchase should answer one critical question: who will buy this property and why? If that answer isn't clear, the deal carries unnecessary risk. Avoid buying landlocked parcels without legal road access. Never ignore zoning restrictions that limit development potential. Skipping due diligence to move faster often leads to expensive surprises. Overpaying based on active listings instead of closed sales erodes margin. Most importantly, never buy without a defined exit strategy. Discipline and clarity protect both your capital and your confidence. After completing a few profitable deals, the focus shifts from learning to scaling. Growth should be structured and measurable, not rushed. Track key performance metrics such as leads generated, offers submitted, deals closed, average acquisition cost, resale price, and return on investment. These numbers give you clarity on what's working and where to improve. Standardize your due diligence checklist, purchase agreements, and listing templates. Create repeatable marketing workflows. As volume increases, consider automating or delegating routine tasks. Scaling successfully means maintaining quality and discipline while increasing consistency and deal flow. Land investing rewards discipline over complexity. Unlike traditional real estate, you don't need construction skills, tenant management experience, large teams, or complicated financing structures. You're not dealing with repairs, renovations, or midnight maintenance calls. Instead, success comes from structured research, buying below market value, planning your exit before you purchase, and following repeatable systems. Simplicity is the real advantage. When you remove unnecessary variables, you reduce risk and increase control. Beginners who stay consistent, follow proven processes, and focus on conservative acquisitions can build confidence quickly. In land investing, clarity and execution matter more than experience or sophistication. Getting started in land investing begins with the decision to act strategically. Define your budget and risk tolerance. Choose a clear niche, such as rural acreage or infill lots. Commit to structured due diligence before every purchase. Surround yourself with education, mentorship, and a supportive community to shorten your learning curve. Use proven frameworks and step-by-step systems to avoid common beginner mistakes. Vacant land offers one of the simplest entry points into real estate, but success requires consistency and execution. Take the first step today, build momentum with your first deal, and begin creating a scalable land investing business.